Thank you everyone for attending. Today we will be discussing 2025 sales tax update with Avalara. And before we begin, let's go ahead and cover a few housekeeping items. Webinar participants are placed on mute. Please use the Zoom chat for all communications with us. If you have any questions during this webinar, please post them in the Zoom chat box for consideration. You will also receive a recording of this webinar in the next few days, so please engage with us by contacting your assigned account manager or reply back to any of the emails from Cumula3 Group or George from Avalara. All right, now we have our presenter today is George Padilha from Avalara. George, please take over.
Thanks, Ketchens. I appreciate it. Just as a disclaimer for this presentation, while I am presenting, information that has come out publicly, we are not tax advisors. So I would strongly recommend you reaching out to your tax professional to validate all of this information that's being presented today. So my name is George Padilha. I'm a Senior Strategic Alliance Manager for Avalara. Been at Avalara about 8 years, and my job is to manage the relationship between Cumula3 and Avalara, which means that if you are a customer of Avalara and you were ever having issues, you want an upgrade, you would work with Cumula3. I would work with them in the background to make sure that your needs are always taken care of and you're always satisfied. So that is my role. But today we're going to be talking about the sales tax changes from 2024 and the new updates. So we'll cover simplifying economic nexus, movers and shakers on the 2024 ballots, more states consider retail delivery fees, taxation on digital goods and streaming. The EV tax credits looks like they might be ending in several states. And then e-invoicing is probably the biggest thing that's coming down the pipe. And then finally, Avalara solutions that may help mitigate these changes. And then any questions and answers you may have. It's only going to be about 30 minutes or so. Let's just get to it. So the economic thresholds that have been changing, for those of you who are unfamiliar, in 2018, there was a Supreme Court decision called Wafer versus South Dakota. And what that does is it established a precedent to where you no longer need physical presence to be required to collect sales tax. So after 5 years, that definition is changing on every state. So Indiana moved its 200 transaction threshold, as well as Wyoming, as well as Alaska, as well as New Jersey. And I'll go into the next slide what that necessarily means. So if you look at the United States has a whole bunch of different thresholds of what the economic nexus is. And nexus, for those of you that don't know, is the requirement to collect sales tax within a certain jurisdiction. So normally, prior to 2018, the ongoing notion was you needed physical presence to be required to collect sales tax. Well, 2018 did change that with that Supreme Court decision, but everyone has different thresholds. So if you look on this map, for example, California, Texas, and New York all require $500,000 in sales before you are required to collect sales tax in their jurisdictions. Whereas in Georgia, for example, it's $100,000 or 200 retail transactions, which means if you're selling a widget for $1 a piece and you sell 200 widgets, you now have the requirement to collect sales tax in the state of Georgia, even though your revenue is only $200. But then take Connecticut, for example. Connecticut is 200 retail transactions and $100,000 in sales, which means you could be selling a turbine engine in Connecticut for $1 million a piece. And if you sell 100 of them, you have $100 million in revenue, and you do not have to collect sales tax because you didn't meet that other threshold of the 200 retail transactions. So this is just one layer of why sales tax is complicated, because everyone has the different thresholds as to what is taxable and what's not taxable. This does not replace, by the way, that physical presence requirement. So if you have a remote employee, If you have an office, if you have a warehouse, if you're using a third party for your warehouse, you still have those requirements to collect sales tax. This is just an extra layer. So in terms of tax changes that have happened, property tax have changed in the state of North Dakota to where voters rejected a property tax bill that would have banned property tax based on assessed values. Similarly, because no one wants to pay taxes, right? So generally speaking, it's no, no, no. Oregon denied a measure that would have imposed a corporate minimum tax rate on gross sales. And then South Dakota voted against the measure that would have repealed grocery taxes. But Nashville, interestingly enough, approved raising the sales tax to 9.75 to fund transit. And I imagine it's because of the ever-growing boom that's happening in Nashville right now. The most interesting one probably is the one in Louisiana, to where they were set to have their sales tax drop in July 2025. But what happened was House Bill 10 actually is raising it from 4.45 to 5% starting January 2025. So the decrease is not going to happen now until 2030. And even then, it's only going to drop to 4.75. I imagine there isn't a lot of revenue being come out from Louisiana. And since it is such a huge tourist area, sales tax is the way that they can collect taxes without too much quote unquote blood on their hands. So more states are also considering retail delivery fees. So if you ever looked at Uber, they're delivering a lot more things now than just food. Now they're looking at, pet food or pet products, or stores. They'll actually go and do the shopping for you. Well, now they have delivery fees. So Colorado just increased their delivery fee 29 cents as of July 1st of 2024. And Minnesota imposed a 50-cent fee on deliveries that are over $100. So, and then there are other states that are considering that retail delivery fee, Maryland, Nevada, Nebraska, New York, Ohio, and Washington. So digital goods is also something that is going to be taxed differently as well. In California, they're proposing to expand taxes to include city streaming services in the city of Santa Barbara. And you're looking at, so the city of Santa Barbara and Disney are in court to for a $642,000 charge for video utility tax. Now, when you think of streaming services, you think of Disney Plus, you think of Netflix, but this also includes companies like Peloton, who have a subscription service for their streaming content. So just keep in mind that those companies are affected as well. So it's considered a communications tax. So just keep that in mind, that if you have a subscription service that streams any content, California might be affected if you are in that state. And then Massachusetts and New York both introduced bills for streaming as well, but they're not there yet. So digital taxation of goods are things like audiobooks, digital codes, NFTs. Louisiana extended that sales tax rate to cover those products as well, and Michigan covered the NFTs. Georgia is starting to tax select digital products starting January 2024, and Vermont as well is doing the same thing, to where Vermont is considered SaaS software that's pre-built being tangible personal property as of July 1st, 2024. So electric vehicles are another thing that have changed. So DC is looking to have the tax at a standard rate of 6%, whereas Pennsylvania is eliminating the alternate to fuel tax for electric vehicles and replaced it with an electric vehicle road user charge. And then Jersey is on the way of ending its sales tax for zero emission vehicles. E-invoicing is probably the biggest thing that's changing in the landscape of the world. And it's because governments are trying to collect sales tax in a more efficient manner. Traditionally, you had to fill out a sales tax return, whether that's the form of VAT or in the United States sales tax, and then you would file, and then you would remit those payments. Well, they want their payments in real time now. So what countries have said is that you have to have an e-invoice in real time for all transactions, and they're starting to roll out. So these are some of the countries that are doing it. So Germany, as of 2025, January 1st, must be able to receive e-invoices. France is postponing its mandate to September 2026, as well as Poland. And then January 2025, Saudi Arabia will be requiring businesses with an annual income of 7 million Saudi Arabian rupees, and they're requiring sales tax as well. So this is an ongoing wave, and it's not just in Europe or the Middle East. It's also happening in South America. Actually, South America is already there in Brazil for those e-invoicing mandates. So Avalara does have a lot of solutions that can help with these ever-growing changes. And the advantage of Avalara is that we change everything in real time. So you don't have to worry about updates. You don't have to do anything manually. And that's whether it's tax calculations, VAT calculations, or if you're filing exemption certificate management, we covered that as well. Exemption certificates, sales tax returns, whether that's VAT returns, sales tax returns per state, and then also that e-invoicing piece. That's going to be a big change in Europe and is already happening in South America. We cover the gambit of that. Other things that we have are licenses and registrations, tax research, to where if you're looking to do tax research on your own, a lot of times you're going through, 10 or 20 different sources to actually come up with that information that you need for your company. Well, Avalara has this one website that is a huge repository for all of that sales tax information. So instead of having to go to 10 or 15 sites, you're just going to that one. Or if you're doing international, we do a lot of cross-border and item classification as well. 1099s is a big thing as well, as to where if you want to automate your 1099s or W-9s, we do have that solution. If you do have brick and mortar properties, property tax is something that we can cover. So we'll cover all of your property taxes for everywhere in the country. The minimum usually is about 5 locations for you to just have a conversation with us. Anything more than 5, we can certainly talk about that. And then we're also one of the only companies in the country that offers streamlined sales tax. And what it is 24 states got together and just wanted to make it easier to be able to collect sales tax from businesses. So they are offering free returns, free filings, free calculations. And it's not going to make Avalara free, but it does give you about a 20 to 30% on average discount by doing that streamlined sales tax program. Again, it's not an Avalara product. That's a state subsidized program. Let's say you don't know if you do have liability or not. You're unsure. We can do a sales tax risk assessment for you. We have 2 separate versions. One is a free version that looks back 12 months. And it'll see exactly what sales you've had in every state, and we'll go ahead and figure out where your liabilities are. There's also one that is paid for that is a little more involved, and that looks back 5 years. And we share the results with you with an accountant, and they'll just go over the results with you. So that's really the breadth of Avalara solutions. We're the only company that does have everything in-house, and we have a wide array of services from A to Z, to where you don't really need to go to anyone else to do certain portions. You don't have to piece your solution together. And with security being such a big issue in the world, you know, we're very proud of keeping everything in-house, and we're also SOX compliant too. So that's all I really had today. Thank you very much for your time. And if you do have any questions, please feel free to ask. Thank you.
All right. Thank you, George. You actually made a tax presentation interesting. So thank you for that. Please go to the next slide.
Not a problem. Yeah.
All right.
Yeah. So just really quickly, if you'd like, just let me know, and I'd be more than happy to send you the Avalara 2025 sales tax changes PDF as well.
That's great. And then as a reminder, you will receive a recording of this webinar in the next few days. So continue to engage with us by contacting your account manager or reply back to any of the emails that we send you. And we'll make sure that your C3 advocate definitely gets a hold of you and refer you to the right department for assistance. If you have any topics you would like for us to cover in the future, we'd love to hear from you. And please either email us back or chime in to us, and we will make sure to assess whether that topic can be covered and when it can be covered. This concludes our webinar for today. Make it a great day, everyone. Thank you so much, George, for your time.
Thank you.